Hello traders, Gary Wagner here at just about 10:15 in Honolulu, 4:15 in New York. It is Tuesday, September the 6th, 2016, and this is the Daily Report for Gold and Silver, our Trending Markets edition. Fractional gains in the U.S. equities markets, with the Dow Jones Industrial Average closing up about 0.25% on the day, 46 points roughly at 18,538. Standard & Poor's up about 0.3% at 2184.50. And then finally, NASDAQ trading a little bit over the rest of equities. Tech's really leading the way, 4827.50, up 32 points, or a net change of almost 0.7%. Now, the big news today was an utter fall in the U.S. dollar, falling almost, or over, I should say, a full percentage, a 1.04% to close at 94.85. So traders, absolutely no doubt, a tremendous amount of pressure put on the U.S. dollar. Of course, that very supportive, not only to the precious metals, but to crude oil, because both of those commodities are paired in U.S. dollars. We're looking at a simple candlestick dollar chart daily. This is today's move down, a tremendous 1% drop in the value of the dollar as we start our new season, so to speak. Summer has ended, and you can see we've seen this happen before, but it is a fairly rare occurrence, this pointing back all the way really to the beginning of March here, when the dollar index was much closer to 100 than it currently is, as it tracks at about 94.84. Now, the key is, as we have just completed doing the gold forecast portion of our broadcast, we talked about the tremendous rise that we saw overall in the precious metals, and the dollar certainly accounted for a vast percentage of it, but not the full majority. And really, the way to take a look at it, of course, is the Kitco Gold Index. And as we talked about just a few seconds ago on the gold forecast, we talked about the fact that really gold was trading up about almost 2%. That was 2% in the December contract, the COMEX contract. This, of course, is off a spot, up 1.75%, a gain of $22.70. But if you look at the breakdown, here's that 1% fall in the U.S. dollar, and it, of course, is going to amount to a 1% net change in the precious metals as well as crude oil. Crude oil closing in essence unchanged in terms of normal trading, but the dollar giving it tremendous strength, so it closed up 39 cents or 8.87 over 0.75% net change. But when we look at, for example, gold, $12.90, that's added just because you have a weak dollar, but then you had some real strong additional buying coming into the market. Same with silver. Silver was up almost 4% in the COMEX contracts, about 2.5% in spot, up 50% in spot, a 1.5% rise, 30 cents, directly accountable from buying, and then, of course, another percent, a gift, so to speak, due to a weakening U.S. dollar. Equities markets, fractional gains, as I said at the beginning of this report, about 46 points of gain in the Dow Jones Industrial Average. We're just off of these record historical highs in the market, but it doesn't really take a tremendous move in the market to actually go ahead and exceed that. We have been trading in a fairly narrow and defined trading band. This is a weekly chart, traders. This isn't daily. This is weekly. And you can see over the last couple of months what a tight trading band we have seen U.S. equities really fall in. Of course, these last couple of months represents really the tail end of summer trading. That has ended today. Traders are returning to their desks, wiping the dust off their monitors, taking a serious look at the market, and we've got a lot of cash on the sidelines. Now, historically, September's a really tough month for equities, but we have so much cash sitting on the sidelines, we could see a boost to the upside. One way to look at it. The other thing we have to be real cognizant of is we've got a pretty fractured election coming up. And what I mean by fractured is that we have two candidates with really the lowest approval rating that I think we've seen in history, 37%, maybe 45% with Clinton and Trump, just tremendously low approval rating and likability. So nobody's really excited that much about either candidate. It seems to be that this vote is who is the better of two evils, and we'll let the voters decide who that is. But the key is that this market could truly take off like a banshee and move up with all the cash sitting on the sidelines. With all the uncertainty with the election, we could see it come under tremendous pressure. My sense is, and it had been, that once that money comes in, there's really nowhere else to put it that's going to give you that kind of return. Now, we have seen gold really return and silver to safe haven kind of favorability, but nonetheless, we want to see where this market breaks. I'm on record saying I think it's going to break to the upside, but we will have to see. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.